Have you ever wondered how the recent changes in the business environment might impact your operation? In today's discussion, we'll demystify these changes and how they might affect you. First, let's consider the Government Emergency Ordinance 156/2024, also known as the Train Ordinance. This legislation introduces a wide range of changes beginning on the 1st of January 2025. One of the main changes is the increase in the tax rate on dividend income to 10%, up from the previous 8%. This applies to both individuals and legal entities. If you're an individual, whether resident or non-resident, this new rate will apply to you. However, non-residents should also consider the provisions of the double taxation avoidance agreement with their country of residence, or any exemptions for this tax provided by the tax code. A useful tip here is to take advantage of the exception in the legislation that allows dividends distributed on the basis of interim financial statements drawn up in the course of 2024 to be taxed at the old rate of 8% without recalculating the tax after filing the annual financial statements for 2024. If you're a legal entity that holds shares in another entity and withdraws its dividends, you will also be subject to the new 10% tax rate. However, there is an exception to this. The tax on dividend income does not apply if both entities, the one paying the dividends and the one receiving them, meet the conditions for exemption from this tax. Next, let's talk about the tax situation for micro-enterprises. In 2025, the micro-enterprise threshold is reduced from 500,000 euros to 250,000 euros. This condition is verified on the 31st of December, 2024. So do check to see if you can still remain in this category, which for many small businesses is still the most advantageous form of tax classification. From 2026, the micro-enterprise threshold is further reduced to 100,000 euros, with this condition verified at the end of 2025. Be aware that if this threshold is exceeded during the year, the company will owe corporate tax from the quarter in which it exceeded this limit, without the possibility of returning to the micro-enterprise regime. However, on a positive note, the condition of earning revenues from consulting and/or management in a maximum of 80% of total revenues is eliminated from the 1st of January 2025. This means that you can carry out such activities and remain a micro-enterprise. In summary, the recent changes in the business environment, as embodied in the Train Ordinance, have significant implications for small businesses. The increase in the tax rate on dividend income and the reduction in the micro-enterprise threshold are the most notable changes. However, there are also some positive aspects, such as the removal of some conditions for micro-enterprises. As always, the key to navigating these changes successfully is to stay informed and adapt your strategies accordingly.